Hello everyone. In today's video, we are diving into two key updates. The first one is around the US tariff implications on Indian economy, and the other one is a quick summary of the Q1 FY26 corporate earnings. As most of us would be aware, President Trump has actually imposed a 25% tariff on Indian imports starting August 1st. In addition to this, there's an unspecified additional penalty because of the energy and military purchases from Russia by India. It might not lead to any near-term trade diversions, given that most of the competing nations also fall into the bracket of 15 to 20% tariffs imposed by USA. But the difficult situation here for India is the fact that US is already threatening India for much higher tariffs if they do not comply. Now, it's important to note that from India's perspective, and US exports is just about 2.2% of India's GDP. Some of the major sectors where the margins might be impacted in the near term due to tariffs include pharma, auto and auto ancillary, textiles, gems and jewellery, among few other important sectors. Now shifting to corporate India. Q1 FY26 results thus far have been a mixed bag. If you look at Nifty 50, the top line growth has been between 4 to 5%, whereas the bottom line has grown only between 6 to 7%. Now this is the fifth consecutive quarter where Nifty EPS growth has been just in the range of mid to slightly higher single digits. This is important to note that this is on the back of FY21 to FY24 numbers, where Nifty was galloping at a pace of more than 20% plus EPS growth. The street is expecting FY26 overall to close at an EPS growth of about 10 to 11% from the previous year. Now among sectors, if you look at the strong performers in terms of growth, we look at the likes of capital goods and industrials, cement. But if you look at some of the weaker performers, we look at the likes of FMCG, IT, as well as private banks, which have not shown as much growth as compared to some of the other sectors. So, Q1 FY26 results have left much to be desired from the rest of the year. The next few quarters will have to do the heavy lifting as far as the EPS growth is concerned for Nifty. So we'll have to wait and watch for that, because that will shape the direction on the Indian equity markets for the upcoming quarters. That's it from the equity perspective for today.
Hi everyone. We had a RBI monetary policy meet in which RBI maintained the policy rate unchanged at 5.50% after front-loading rate cuts in the previous policy. The RBI MPC also maintained policy stand as neutral. However, we see this pause as a hawkish pause. On the growth dynamics, RBI maintained the financial year 2026 GDP growth projection at 6.5%. and Q1 financial year 2027 at 6.6%. On the inflation, RBI lowered the inflation forecast for financial year 2026 to 3.1% from an earlier 3.7%. However, for Q1 financial year 2027, RBI projected inflation at 4.9%, mainly due to base effect. On the bond market side, we see the yields rose up by 7 bips as market is pricing no further rate cuts in the market in the near term, and see a terminal repo rate at 5.5% at least for the near term. However, we see a possibility of 125 bips rate cut in the second half of this financial year 2026. The RBI going forward would be more data determined and will also see how the global economy pans out to take further course of action. Thank you.